I want to start this module by talking about the transformational mobile-based payments as a prelude to understanding how mHealth might progress forward over the next few years. I'd like in this part to tell you the story of Mpesa. Most people think that Mpesa is a technical solution to a simple problem, but in fact it was quite complex, and it's interesting to understand the origins of it. So the first thing was that there was an agnostic research to go out and find how people were using mobile phones in the early 2001-2002s. This is a time when in Africa only a few % had ownership of the mobile phones. Although interestingly, if you ask the question, have you used a mobile phone in the last 3 months, you were getting 70 to 80% responses of yes. So the use of the phone was becoming strategic, and then if you asked people who they were phoning and why they were phoning, they were telling you that they were phoning because of remittances. Africa's households are often multi-spatial and set over a number of different locations. A husband has gone away for work, or the oldest son has gone away for work, and the phone calls were to them saying, "School fees are due, please can you send me some money?" Now in Africa at that time, particularly Africa, but it's also true for some of Asia, at that time most Africans didn't have bank accounts. Again, it was only a few % who had a bank account, and therefore to transfer money was really difficult. The only options were really to send the money on a bus in cash, in an envelope, and hope that it got to the other end, or to travel yourself, which often meant taking 3 days off work to go to your homestead and back again. So there was great demand for remittances and for sending cash around the country or sending money around the country. In 3 different countries, Uganda, Botswana and Ghana, people had spontaneously worked out that they could effectively send money by buying airtime for their mobile phones, not putting that airtime on their mobile phones, but actually texting the code to one of their relatives or to a merchant near their relatives. And then that code could be put on a mobile phone, either the merchant's phone, and then he would give the relatives cash, or on their own phone. And that was effectively a virtual money transfer. So even in 2001, 2002, that phenomena was documented. And that led on to the researchers actually engaging with the policy enabling environment and with the private sector to try and get that virtual spontaneous activity taken forward in some realistic, legitimate way. So the next steps, having seen that research, and the telecom in Mcell in Mozambique was introduced to it, and they introduced a form of airtime swapping called credit swapping. The problem with the spontaneous system is that once the airtime code goes onto someone's telephone, it's trapped on that mobile. You can no longer pass it on to anybody else. Mcell in Mozambique in 2004 introduced this credit swapping, which meant that if I have, say, 10 minutes of airtime on my phone and I want to give you 5 minutes, that's quite possible. I can transfer those 5 minutes to you. So within Mozambique, we saw a growth further of this virtual money transfer as airtime was swapped for goods. And then as researchers, we were introduced to the various private sector players, mainly through the donors. And I think I'll come to the whole regulation and policy framework in a moment because that's really important. But to continue the main thread of the story, the researchers approached Vodafone, their corporate social responsibility department. To put this in context, Vodafone had just closed their European mobile money offering. Because in Europe we have lots of other cash instruments. We have credit cards, we have debit cards, we have bank accounts. They had introduced SimPay in 2004 and they were closing it in 2005 because it just wasn't working. There wasn't the take-up. Here in 2015, we're just beginning to see people use mobile money on their phones in Europe, which really is just them using their phones to access their bank accounts. What we had planned for Vodafone in Kenya was something completely different. The product suggested was not accessing a bank account, but it was using a mobile phone to store value and then to transfer that value through the mobile phone system. So it emulated this airtime swapping, except that instead of calling it airtime, it just kept it as cash. That was not a simple process. Vodafone accessed £1 million from DFID in support, and then they matched it in their own personal expenditure. They spent 18 months doing a pilot, and only in 2007 was what we now know as Mpesa, the commercial product, launched. One small point, which you need to consider if you're implementing mHealth products, is that the telecom agencies, the mobile network operators as we call them, MNOs, have a very clear focus on profit. Every quarter the CEO is asked, have you made a profit this quarter? And if he hasn't, his job is under threat. For the MNOs in 2005, 2006, when this proposition was being considered, they were making so much money from voice that they didn't necessarily want to do other things. And only the public funds from DFID were the key that unlocked their attention and made them follow through for 18 months. One person within Vodafone actually said, if you can't take an idea to profit within 6 months, the directors will not listen to you. So to spend 18 months actually doing a pilot was quite a challenge for them. At the same time, it was important to realise that although Mpesa is the famous one now, there were lots of other things going on as well. Orange, the mobile network operator, were also having strategic discussions, and the research fed into that. And in West Africa, you now have mobile money. Over in Asia, in Cambodia, the ANZ Bank looked into the research and started something called Wing. Over in Sierra Leone, you had a couple of private entrepreneurs who looked at the research and started something called Splash. So although M-Pesa is the famous one that went from 0 to something like 18 million accounts in 3 to 4 years, these others have grown to hundreds of thousands of accounts, and in some cases millions. However, like I said, it's not just a technical problem. It's about regulation policy. So there was another string of work where policymakers were getting involved. The researchers approached an MP here in Britain and presented their research. A British MP called Stephen Timms started to get involved, and at that time he was Gordon Brown's number 2 in the Treasury. And after conversation with the researchers, he invited the researchers to present their research to a Treasury team. And that Treasury team included the Financial Services Authority of the UK. Now the reason this is important is because this new product that Vodafone and Safaricom were considering fell into a very strange policy space. It wasn't a bank. It wasn't a traditional money transfer, so how should it be regulated? Should it be regulated by the telecom regulator, or should it be regulated by the central bank? The Treasury was important because they were the first people to recognise that if you limited the amount of money that could be transferred in any one day, and you introduced some limited know your customer, this is what banks call the idea of needing identification, but if you limited the know your customer proposition and the amount of money that could flow through the system, then you could create this new beast with limited risk of money laundering, terrorism and all that stuff. Again, you need to understand the world context. The attack in New York happened in 2001. So by 2004, 2005, people are still very, very twitchy about terrorism and money laundering. So in a sense, there is a counterwave against this proposition. However, the Treasury and in fact other World Bank players started to get interested in helping the central banks of Africa to understand that this proposition was not a threat to the banking system and could really enhance their people's experience of economic life. So they invited, for instance, the Kenyan Central Bank to Britain and explained to them the possibilities. And in fact, M-Pesa was eventually launched with a letter of no objection from the central banks. So there was no massive policy change to create the space for M-Pesa. but there was almost a gap in the policy which was then exploited. It wasn't being covered, and they exploited that gap with the permission from the government. The other thing was how this new proposition connected to the existing banking system. Unsurprisingly, bankers tend to go to banking conferences. Mobile network operators tend to go to conferences on telecoms. And actually, everybody else goes to conferences on microfinance. So these three constituencies never really crossed over and met with each other. And there was very limited contact between them, particularly around this space of 2004-2005. So one of the steps that the donors took was DFID, the IFC, the World Bank, CGAP joined together to create a conference in cooperation with the GSMA, the Trade Association of Mobile Network Operators, to discuss mobile money. Now, that may not sound a very exciting thing to have a new conference, but at that conference, it was very purposely 1/3 of the people who were invited were bankers, 1/3 were telecoms, and 1/3 everybody else. And then that meant that that conference of nearly 2,000 people created a fantastic space for people to create networks and to do wheeling and dealing, come up with new ideas. The conference only had to be subsidised by the donors for the first year. It used public funds to start it off, but since then it's been a commercial enterprise and the private sector runs it, and it's called Mobile Money Summit. So those networks started to create new business propositions. And if we look at 2015, we see that the mobile money space is now populated by Airtel, a mobile network operator that operates in many African countries. And they have a mobile money proposition. MTN, they also have mobile money. In fact, almost every telecom in Africa has a mobile money proposition. And when we look at something like Tanzania, Tanzania has 3 operators. They each have approximately 1/3 of the customer base. And so they see mobile money as a mechanism to grow their customer base. They're trying to overtake their rivals. So it's going to scale in all these different places and coming up with propositions, different price points, becoming part of their general offering. In the next module, we'll talk about how this story of how mobile money actually grew applies to mHealth.